Hi, Prudence.
Hello.
How are you?
Are you good? Good. How are you?
Great.
Good to see you.
Good to see you as well.
Where are you located?
I'm actually located in the state of Missouri.
Okay. That's nice. Is it already cold in there?
It is. It's actually like 25 degrees with snow on the ground already.
Oh, wow. Okay. All right. White Christmas coming.
Yeah, exactly. Exactly.
Yeah.
So we have two of the seven members of our leadership team present, Joemi and Jonathan, including myself, obviously.
Hi,
Um,
how are you guys?
how are you?
Hello. Can you see us?
Yeah, I can see you guys.
Okay.
I'm still at work, so that's why I have my camera on right now.
Oh, no problem. I looked at your website. It looks really cool. Who built the website?
Yeah, I built the website actually.
Oh,
Thank you.
wow.
Yeah, I
So
work
what's,
full time
uh-huh,
as a
go ahead.
software engineer.
Nice. Even the design is like really nice.
Thank you.
Hmm. So, like, tell me a little bit about what's behind the website. Like,
So,
what's your vision for the business?
so our vision basically, we aim to be a global real estate investment group. Um, Obviously, we have a ways to go, and that's why we're engaging professionals like yourself to better understand how we can, successfully navigate our mission.
Hmm.
So
And do you
there's a,
have,
oh, I'm
yeah, go
sorry, go
ahead.
ahead. Yeah, there's several of us decided to form a group because we all share our interests align in terms of investing in real estate. So we decided to form a group and see how we can pull our resources together to collectively learn as much as we can. Obviously, gathering as much intelligence in real estate as we can to apply that so we can successfully invest in real estate in several areas. One of which we began is with wholesaling. And
Hmm.
yep, so
Is that an area that you are looking at, or have you made any deals yet?
yeah, we're exploring that area now. We're doing our due diligence. We're in the research phase right now. So this week we plan to begin our efforts.
Okay. And which geographic area are you looking at?
So because we have members, we have multiple members within our group. Like I said, I mentioned we have 30 plus members, and they're located across the U.S. So we're going to split into teams and tackle
Hmm.
several areas simultaneously.
What are the other areas? Oh,
Um,
you mean geographical areas?
Correct, correct.
Okay, makes sense. And how is the entity structured?
So yeah, that's just it, right? We haven't formed the LLC just yet. We met with several attorneys to better understand how we should go about formatting this LLC, given the fact that this is new for all of us. We weren't exactly sure how we should structure the LLC. So we wanted to understand what we should consider before structuring the LLC. So we met with several attorneys, and they also suggested that we meet with the CPA, which is why we're engaging you.
Okay. Yep, absolutely. Um, and so you mentioned there are seven leadership members and 30 plus members. Have
Mhm.
you talked about like how much of participation or active managing each of those members are going to involve?
Yeah, the we met with the real estate attorney, or excuse me, a business attorney who shared. They basically shed some light on some concerns that we need to address. So we're actively investigating that area as far as outlining with who's going to do what and where we place value on what participation or contributions from each member.
Okay. So you're talking about the equity split, right?
Correct. Ideally, we want to, like, for example, once we begin our wholesaling efforts, we're just going to, right now, everybody just receives an equal share until we identify, um, you know, some other concerns if they arise.
Everybody meaning 30 plus, so everybody owns like 3% roughly.
Right. So whoever participates.
Oh, okay.
So we
I see.
have 30 plus members, but not everyone is ready to participate. At the moment, we have roughly 7 to 10 members who are actively able to participate in this effort today or this week.
Meaning with capital.
Correct.
Okay. And what about the management input?
So the management input, like I said, are you asking like who's managing the day to day or?
Yeah. So who's doing more of the heavy lifting in visiting the sites, screening the deals, doing the research, and managing like whatever the process that follows?
Well, our leadership team, like I said, is 7 of us. So we're the aim is to split the work evenly.
Okay. Okay. Yeah, I mean, if everybody's input, including management and time, as well as capital, are all equal, then that's probably fine.
Okay.
And so in the tax world, the big definition for the tax implication, one is active, one is passive. So some members might be general members, and some members might be limited or general partners and limited partners.
Okay.
And the tax implication is different.
Okay, yeah. Can you inform us on both? Because there will be that variation, right?
Yes. So technically, general partners are responsible for the liability of the asset. Mm-hmm. So for example, I don't know if you are planning to flip the houses. So for example, there's an accident during the flip, and there's some liability involved. The theoretically general partners will be personally liable for the liability of the LLC, even though it's a LLC, but it's a more like a partnership. Whereas the limited partners are not personally liable for the liability of the LLC.
Okay, so yeah, it seems that that's aligned with what the business attorney recommended, that we have the main general members where we are basically assuming the responsibility, and then everyone else are just limited partners. So there would just be a limited partnership agreement with the LLC based on their active participation.
Mm-hmm. Yeah, and on the admin side, so if you are thinking of forming a partnership, the more members in the partnership, the more expensive your tax filing cost will be.
Can you elaborate on that?
So if it's a partnership in general, the each LLC will have to file a 1065, and each partner will also get a K1. That's there's like CPAs charge anywhere between 1,000 to like a few thousand, depending on how many partners you have within that partnership. So obviously, the more partners, the more expensive it would be. And in general, we would recommend people to set up different LLCs if the asset under one LLC gets over 750,000, just for liability protection. So say if you have one LLC has $2 million of asset on it, and there's an accident in one of the, say, 5 properties, then your whole group of property would be liable to pay for that liability. Whereas if you have 4 LLCs set up, so one has a problem, doesn't impact the other 3.
what if the assets are held in a holding company? Would it?
So yeah, so that's what we generally recommend. So basically, you have one holding company, LLC has multiple LLC that's like held by the holding company, and then you can submit one form for that whole holding company. So make administrative cost like cheaper and also more streamlined.
Okay.
And if you manage it right, then you can also shelter the like the liabilities to some extent between the different LLCs.
Okay, so if we have a holding company that will hold the investment assets, then we wouldn't have the concern of one, if there was an accident or some litigation, one being exposed and potentially exposing the other remaining assets.
Yeah, in that case, we don't recommend having a lot of asset under the holding company, meaning like liquid asset. So it would be under another management company. So that's all part of, entity structure. But I think if you only have a handful of deals, we don't need to get that far.
Okay. Okay. So when assets reach, like you said, you initially mentioned 750, but when should we be concerned? Like at 750, when the assets are at 750, or when we reach like maybe $2 million in assets?
Asset is not a concern. I mean more like a liquid asset, meaning like you have, deals going through an like if you are flipping houses, you have
The liquidity,
just working capital. There's $500,000 sitting out there. Then that's a risk. You need to protect that.
Okay. Okay. Wow. Okay. Got you. Makes
Yeah.
sense. So, what were some of the other investment strategies that you wanted to share with me?
I mean, so my service is very wide. I have a tax planning service, and but that's more for high net worth individuals, professionals, and business owners, and a lot of it has real estate strategies involved in that. But everybody's tax situation is different. So some people might be in a very high tax bracket or in a very high or expensive state like New York or California. And Missouri is probably not as crazy, but still, like there are some strategies involved. Federal state, for most people, it's the same, but everybody's employment situation is different. If you own a business, you have more flexibility. If you are W-2 and make like above 100 to 150,000 single or as a family, then there are certain rental losses that you cannot take to offset your other income. So basically, it's for tax planning, it has to be like very personalized. I have clients who are partners in flipping business. They do like 80 deals throughout the year, but they are my client like on separate basis because they are not on the same page all the time, and they have other, personal situations that doesn't apply as a whole, right? They have their own situations and desires. So that's one big chunk. And then the other part is asset management and as well as comprehensive planning. And I do a lot for professionals, like very busy professionals who are interested in either become a full-time investor or retire early.
Wow.
Yeah. So the former is more like focusing on your tax burden for this year or like a couple of years looking forward. And asset management is more like a holistic picture of your entire, lifespan. Like what's your current situation? What do you want to achieve for your whole lifetime? Like what are the other things we need to consider? Like what kind of strategy makes sense for you?
Okay, so what does that entail in terms of cost and time?
Yeah, so let me share.
Did you get a chance, an opportunity to review the questions we posted in the Excel doc that we shared?
This morning when I checked, I didn't see any questions in the CPA tab.
Okay, yeah, I did update it.
Okay.
There's one or two in particular that, if we have time, I'd like to get to.
Okay.
I'm ready.
Yeah, no problem. Yeah, so basically on the tax planning side, I have these two packages. One is for professionals. So basically, it's 6 one-on-one sessions at 2,500 roughly. And for small business owners, it's 8 in-depth sessions and at 3,500. And either one of them, I would recommend starting with a proactive tax review. So basically, that's a chance for us to work together to understand if it's mutually a good fit, and also an opportunity for me to review your latest tax return and see if there are missed opportunities, if there are errors, and what makes sense for this year and going forward.
Can I see those other bullet points in the other two plans that you just pointed out?
Oh, this too?
Uh-huh.
I'll send you the link.
Okay, thank you.
So where is my chat? Oh.
Oh, okay. So
yeah, a lot of times people who want to implement very aggressive tax planning strategies will opt for those. One of the two.
Mm-hmm. Well, it's interesting, right? Because you're already working with real estate investors. Question: Are you working with any investors who are working, who are focusing their efforts in wholesaling?
Yes. So for the flipping business I was talking about, they basically get a lot of deals through wholesale, and they also purchase from the individuals.
What is the one thing that, like, one tip you would advise us as, obviously, newbies who are setting out to wholesale?
I would say, well, really look into like what's your potential risk and really do like research. And a quick way to learn is to work with experienced people. So maybe include a few more people that's more experienced on your leadership team.
Okay. Okay.
And there are many masterminds and courses out there, but of course you need to scrutinize like which ones are good, which ones are not. And I've seen also people who invest a little bit in another more experienced syndicate or renowned syndicate, and then that way they can learn their processes.
Okay. If you have any referrals that you work with personally or come into contact with, we'd be happy to, you know, engage them as well. Engage their services as well. So if
I'll keep that in mind.
You know, I don't know, paid speakers.
Where have you looked?
So the first things that we began, we haven't I wouldn't say we've done a deep dive just yet as far as wholesaling is concerned. We did take a look at Udemy because they have a wide array of wholesaling courses. So we did begin to explore courses there, but that was the extent of that search.
Okay, so it's more on the knowledge level. What about real experience?
We haven't found anyone. Well, actually, there is one member within our group that says that they have some experience with wholesaling, working with partners that are dealing with $1 million deals, you know, throughout each year. But we haven't. And she's actually shared some tips with us, but we haven't been able to get her fully engaged because she's been pretty busy.
Okay, I'm going to send you a website. This is searchfounder.com. Okay. So basically, this is a platform where people look to buy business, either for equity or for 100% ownership of the business. But a lot of times the buyers are also real estate investors, and they have like in-person meetings in different cities. So if you can go to their in-person meeting, you should be able to know some real estate professionals. So basically, a lot of people who invest in real estate, either flipping or selling or wholesaling, they make a bunch of money, they have some passive loss, and now they are looking to get out of passive loss and generate some passive income. So that's where they go.
Okay, gotcha. Nice.
And you might make some meaningful connections.
Definitely. Thank you for that tip.
Mm-hmm.
So, anything else before we move on to the questions? This has been very, very helpful.
Okay, I'm glad. Yeah. I don't have it. This session is mostly to get to know you and see how I can help. So go ahead with your questions.
All right. Yeah, looks like we have, let me do a time check. Okay, we got about 7 minutes. So the first question is, are there any recent changes in tax laws or regulations that specifically impact real estate investors, and how should we adapt our tax planning accordingly?
Yeah, so are you familiar with bonus depreciation?
No.
Okay. So when you invest in real estate, there are 3 ways to depreciate a property, right? If you're looking at renting it out.
Mm-hmm.
So there is standard residential, like flat line depreciation, 27.5 years for residential and 39 years for commercial. And that is the standard, but there's also cost segregation where you can split out the different items in the property and then depreciate at different speed. And then there's bonus depreciation. That's what people have been using a lot, because since 2017, with Trump's Tax Cut and Jobs Act, he activated something called bonus depreciation. Basically, anything that's under 15 years of useful life can be depreciated 100% in the first year. So that's why people have been jumping on this bandwagon almost. And that is phasing out starting this year. So last year was 100% in the first year. This year is 80%. Next year will be 60%. And then it's going to be phased out after 2025.
Oh, okay.
Yeah.
Interesting.
So that's a big one. And then there is also opportunity zone, where if you invest in opportunity zone with capital gains money, you don't have to pay capital gains on that initial investment. Say if you made $500,000 in a rental real estate you sold this year. If you were to pocket that money, then you have to pay 15 or 20% capital gains on that $500,000, right? If you invest it in an opportunity zone fund, then you don't have to pay that tax this year, and it's delayed for future years. In addition to that, everything that you make in that opportunity zone opportunity can be tax-free after 10 years.
What?
Yeah. You can do some research on opportunity zone, because a lot of times my clients will be like, oh, I didn't know that, because they bought a real estate, but then didn't know it was in opportunity zone. They could have used an opportunity zone fund to buy that property and then benefit from that tax-free benefit.
Wow. Yeah. That's amazing.
But there's risk related to it. Like every niche market has its own trick. You have to be like experienced and know what you're doing.
Okay. But in terms of the tax implications, that is something that you'd be able to help us navigate, right?
Yeah.
Okay.
It's a very popular strategy.
Okay. Wow. Well,
and then there's a bunch related to, IRA, self-directed retirement plans and things like that.
Nice.
But everybody's situation is different. As I mentioned, your skill set is different. Your timeline is different. Your need for money is different over time. So that's why you do need like a personalized strategy and, plan it ahead of time.
Okay. Yeah, that makes sense. Wow, you've given us a lot to think about. Let's see.
Mm-hmm.
One. Okay, let's see. Oh, okay. Jonathan posted a question in the chat. Is it true in real estate investing the interest that we pay on residential property can be a tax deduction?
Yep, that's an expense.
Okay, got it.
But it has to be a rental real estate. So, for example, if you live in it, then that's primary residence. Then it's not rental real estate. Then there are certain rules that we have to be careful of. But there are also other rules that we can take advantage of. So, depends on your situation.
That's interesting. Yeah, so it looks like we're close to time, so I want to respect your time. But one thing that is one other question that came to mind. What about those who are practicing the Airbnb co-hosting? They're you
Do they own the property?
They don't own it, but they're just co-hosting. They work with the owner to get the agreement to list their property on Airbnb, and then
Oh,
they do.
yeah, then it's a business. So whatever you make is income. Whatever you cost you
Mm,
related to that business is expense. But
okay.
there is no additional benefit for running that business. But if you own the property, then it's a different case.
Okay. Okay.
Meaning, if you own the property, there are more things you can do.
Okay. Okay. And is that something? Do you have clients who are Airbnbers?
Absolutely.
Okay.
Short-term rental strategy is very popular.
Okay. Okay. Which has the greatest advantages, the short-term rentals or wholesaling, or just flat out flip? Buy, remodel, renovate, or and flip.
It all depends on your time, skill set, risk tolerance,
Okay.
and what you want to do in the long run.
Okay. Okay.
Yeah.
All right. So I have the. Let me make sure. I just copied the link that you sent me for the services and the searchfunder.com. Okay. Thank you, Prudence.
Mm-hmm. Yeah. Let me know if you have any questions regarding like where to start. So the tax review, basically, I would recommend that like for anybody, because even if you are in a low tax bracket, there are a lot more strategies you can use to tax plan. But then if you're in a high tax bracket, the strategies are different, but the dollar amounts are a lot higher.
What's considered high?
Sorry?
What's considered a high tax bracket?
If your marginal federal plus state bracket is over 25%, that's considered high. So if you are making 100,000, well, different state is different, right? If you are making over 100,000 in California as a couple, that's already high.
I make 140, like close to 150.
Then you are most likely in the high tax bracket.
That sucks.
Yeah, and I have, well, I mean, it is what it is. It's unavoidable, but there are ways you can make it work for you. Always.
Okay. Well,
I have an article about what's considered high tax bracket.
Okay.
I can send you the link. Let me see if I can find it quickly.
Yeah, that would be great. Thank you.
On my LinkedIn newsletter. Well, I'll send it to you, and I'll send it to the group.
Okay.
Afterwards.
Yeah, and I'll sign up for the newsletter as well.
Okay,
Thank
awesome.
you. Appreciate
Any
it.
parting questions?
Anyone else have any last final questions? Nope. I think we're good.
Awesome.
Yeah, you gave us a lot.
Yeah.
We have our leadership meeting coming up here in about an hour and a half. So we'll discuss these points that you covered today, and then we'll definitely, obviously, have some questions for you.
Okay,
And,
looking forward to those. I love it when people are excited about investing and making their situations better.
Definitely, indeed. Thank you.
Okay.
Prudence. Enjoy the
Very
rest
nice
of your day.
meeting you.
Same
Okay.
way.
Enjoy
Thank
the
you
rest
so
of
much
your
for your
day.
time.
Thank you for everything. Appreciate
Absolutely.
it.
All right. Okay, bye for now.
Bye.
Bye.